In class 12th, accountancy, we are on chapter number 8, that is CFS, and today we are going to do the numerical of CFS. So, numerical of CFS can be done by this way, which I am going to show you through PPT. So, first of all, look at the screen. And if you want to know how to make the previous videos or the other, then you can see the previous videos, how to make the complete question. And today I am going to show you, see, then it will be easy for you to understand. First of all, you will write name of the company which is given in the question, cash flow statement as per AS3 Accounting Standard 3 revised, and for the year ended, which is also given in the question. Now see one by one detailed amount. Okay. Now first see the font, cash flow from operating activities, NPBT, net profit before tax, which you will do in working note, then add all the adjustment, subtract all the adjustment, the amount will come. OPV, WC square, operating profit before working capital change. Then you will show the working capital changes like DCA, ICL will be added and ICA, DCL will be subtracted. Then this will be cash generated. And if we paid income tax of the previous year, okay, then that will be cash generated from operating activities, or if that will be negative, you will write cash used in operating activity. Okay, so next, then second activity is investing activity, which is related with NCA, non-current asset, tangible investment. Okay. Now, if that is sale, then the amount is positive because inflow. If that is purchase, the amount will be negative outflow. Now, cash flow from financing activity. Financing activities means issue of share capital, equity or preference, and long-term borrowings, debentures, and long-term loans from banks. Both are indicating inflows. Then what are the outflows? See. If the company is buyback of old shares, then it is inflow, and redemption of debenture, that is also inflow. Okay, now that is, if that is positive, you will write net cash inflow, and if that is negative, you will write cash in. At the end, add these three activities, A plus B plus C. Okay, final. Then opening cash and cash equivalent to be added. Then in our answer, closing cash and cash equivalent will be come out. Okay, so now please see the one question how they are doing. This type of question will come in the exam with note number and in this format only. This is 2020, this is 2019. 2019 is previous year, 2020 is current year. First of all, you should check which is previous year, which is current year. Okay, now see, one by one I am going to tell you. Share capital. Previous 10, now 15. So it means 5 lakh issue of share capital. Clear? That will be in financing activity. Very good. Then next, the reserves and surplus 6 lakh to 7 lakh 50. It means 1 lakh 50,000 is NP of the year. One by one, each item you will check. Okay, now see. 2 lakh and 1 lakh. It means long-term borrowings repaid. That is also non-current liability. It will be in financing activity. Now trade payables, 1 lakh 10, 1 lakh, 10,000 trade payable means current liabilities increase. If the current liabilities increase, that will be shown in operating activity plus after OPBWC square. Then provision for tax, previous year tax should be paid in operating activity and current year's tax should be added in NPBT. If some adjustment is given, then we have to make provision for taxation account. Good. Now see one by one. This is non-current assets, 12 lakh, 10 lakh, 10,000. Previous year is greater than current year. Okay. Some adjustments given, then we have to make NCA account. Otherwise, difference will be treated in investing activity. Good. Now 2 lakh is goodwill, 1 lakh 80,000 is in current year. That is reducing means written off, and goodwill is an intangible asset. Intangible asset is going down, written off. Then it should be added in operating activities. Adjustment. Very good. Then zero is the previous year's current investment, and now this year that is 6 lakh current investment. It means in investing activity 6 lakh rupees will be outflow because that is in investing. Now see one by one. Current investment will be treated as cash and cash equivalent. Okay. Now see inventory. Previous year's inventory is 1 lakh. Current year's inventory is 1 lakh 80,000. Inventory is current asset. Current asset is increasing. So that should be adjusted in OPBWC square, operating profit before working capital changes, in minus 1 lakh to 1 lakh 80. So increase in current asset should be subtracted. Then trade receivable. Trade receivable are also the part of current asset. Previous year that was 1 lakh 50,000 and current year that is 2 lakh. It means 50,000 rupees are increasing for trade receivables. And this 50,000 increase in current assets should be subtracted from PBWC square. Cash and cash equivalent, this is opening, this is closing, that should be entered at the end. Now see notes to accounts. Notes to accounts, 10% debentures in the previous year that was of rupees 2 lakh, now this not in current year. It means that is redeemed, repay, redemption, and bank loan in the previous year that is 0, and in the current year that is of 1 lakh rupees. It means, yes, very good, bank loan taker, bank loan taker. Now see, tangible assets also in the second point. Yes, previous year land and buildings value is 8 lakh. Now in the current year that is 6 lakh 50,000. It is reducing. And in plant and machinery, previous year that was of 4 lakh, now that is 3 lakh 60,000. It means it is also reducing. We compare with the previous year and current. Now see, dividend paid during the year, that is under operating and financing activity, income tax paid during the year, okay, that is also provision for taxation account, and land and building of book value 1 lakh 50,000 sold at a profit of 10%. It means 1 lakh 65,000 rupees asset sold off. So for that, because adjustments given, that's why we have to make two accounts, which is income tax provision account and land and building account. Why we have to make it? Because adjustments given. Okay, if you want to note down, you can, because everything given clearly. Share capital 10 to 15, reserve 6 to 750. For long-term borrowings, we have to see the notes. Yes. For fixed asset, tangible, we have to see the notes. Notes to account. If the number is given, then go directly to the notes. These are the notes which are given at the end of the balance sheet. Clear? Now see. This is cash flow statement. We have to start. Net profit before tax and extraordinary items. Here you will write working note. It means, as I told you in the beginning of this chapter, this is some according to some process, and this NPBTE, net profit before extra tax and extraordinary items, that should be present through working note. Very good. So we have to see the working note, 3,95,000. Then depreciation, 40,000. Goodwill written off, 20,000. See how to calculate goodwill written off. See, previous year 2 lakh, current year 1,80,000. It means 20,000 rupees goodwill intangible asset written off. Then profit on sale of land and building. How we calculate profit on sale of land and building? You can see here. See, 1,50,000 is the book value and 10% is the profit. So 1,50,000 into 10%, 15,000 is the profit. Then how to calculate interest on debentures? See, very easy. Value of debentures is 2 lakh and the rate of interest which is given with debenture as prefix. Yes, this is the rate of interest. When I explained you the chapter debentures at that time also I told you this is the name of debenture. Means the rate of interest is prefix and it is clearly mentioned. So 2 lakh into 10%, that is 20,000. Okay, now 4,60,000 is known as OPBWC square. Note down please, operating profit before working capital changes. 4,60,000. Now we will do DCA, ICL changes and ICA, DCL. Means we have to show current asset and current liabilities changes. Yes, as we already discussed, like trade payables. Okay, I'll show you. See, this is trade payables. Previous year that was 1,10,000. Current year that is 1 lakh only. Then 10,000 rupees we have to decrease. Then increase in trade receivable. Current asset is increasing by 50,000. Increase in inventory. Inventory is also increasing. So the net result is 3,20,000. How? See, 4,60,000 minus 140. So the result is 320. Now income tax paid. How do you calculate income tax paid? Because adjustment given, that's why we have to prepare provision for tax account. Yes. So the net result, see this final column will show your net result, that is 2,55,000. Net cash from operating activity. This is positive item. That's why we can write this is net cash from operating activity. If that will be negative, then we can write net cash used in operating. If that is positive, it means flow from operating. Now next, investing activity. Investing activity. In the investing activity, we have to see these two: fixed asset and non-current investment. Okay, non-current investment earlier that was 0, now it is 6 lakh. It means non-current investment will are purchased. So when we purchased any fixed asset, the cash is outflow. See, that is given here. And proceed from sale of land and building means cash inflow because the organization is selling the land and building. So that cash used in investing activity. How 4,35,000 will come? 6 lakh is minus. 1,65,000 is positive. So net result is negative 4,35,000. It is negative 4,35,000. That's why we can say net cash use. See, use. Why used? Why we can write use? Yes. Yes, very good answer. Because negative item is more, it means outflow is more. That's why we can say that is. Now third activity. What is the name of third activity, my dear? Yes, financing. Good. Financing activities. For the financing activities, we have to go directly to this side. Share capital 10 lakh to 15 lakh. Very good. Long-term borrowings 2 lakh to 1 lakh, but point number 1. So, according to that, we have to see the point number 1, 2 lakh 0, 0 1 lakh. Okay. Now, see. Issue of equity share capital 5 lakh. How we can say issue? Because the previous year the capital is of 10 lakh and in the current year that is of 15 lakh. It means 5 lakh rupees is for issue of capital. Then redemption of debentures, it is given in the note. Previous year 2 lakh, current year 0. It means 2 lakh rupees redemptions paid off. Interest also paid off for 10%. Then bank loan. How we can say bank loan taken or proceeds from raising bank loan? Yes, because the previous year the amount of bank loan is 0. Now that the current year at the end the bank loan amount is 1 lakh. It means bank loan taken. Then dividend paid 1,50,000 given in the question, as well as dividend tax paid 15,000. Yes, TDS we can say, or dividend tax paid. Now see, 2 lakh, 150 and 15. 3 lakh 65,000 rupees and 20 this also. So 3 lakh 85,000 rupees is negative. Okay, and 6 lakh is positive. So the final answer is 215. Okay, I'll explain. See, 5 lakh plus 1 lakh. First segregate the positive. That is 6 lakh. Now negative. Add negative 2 lakh, 20,000, 150, 50, 3 lakh, 85. Positive 2 lakh 15,000. If the answer is in positive, we can write net cash from financing activities 2 lakh 15,000. Okay. Now, see the main point we are on the main point 2 lakh 55 plus 435 minus and okay, I'll tell you. 2 lakh 55 plus 4 lakh 35,000 minus 4,35,000 minus, yes, Again, 2,15,000. This amount is plus. This is A activity, this is B, this is C, A, B, C. So net will be 35,000. How it comes 35,000? Look here. See this positive should be added. That will be 4,70,000 minus 4,35,000. That will be 35,000. That will be 35,000. Okay. Now add opening cash and cash equivalent. How we can find out that opening cash and cash equivalent? Come here. See this one. Here. This is opening. This is opening. 50 and 290. That is 340 opening. And this is closing 70 and 305. How we can say this is closing? We can see the year. 19 opening, 20 closing. So directly we are going towards the answer. See, 50 and 290 is opening, 340. When we add this opening cash and cash equivalent balance to the net changes, then we can find out the closing cash and cash equivalent. See, my dear children, you can check your answer in the exam also. This is 3,75,000 according to our answer and according to the book. See, this is also 70,000 plus 3,05,000, that is 3,75,000. It means our answer is correct. Now next, how to calculate NPBT. As I told you, I'll tell you at the end in the working note. Net profit before tax, NPBT. Net profit earned during the year plus provision for tax plus dividend paid. Transfer to reserve if given, we should also add here. So 1,50,000 plus 95 plus 1,50,000, 3,95,000, which we will transfer to, see, when we starting the answer at the time we put that 395. That time I told you we should write here, see the working note. How this 3,95,000 is coming? Yes, come to the working note again. This is NPBT, net profit given in the question, difference of current year and previous year. Simply, you should use one formula, CY minus current year minus and current year minus previous year. Okay, I'll show you how the current year minus previous year. See this one. Current year 7,50,000 and previous year that is 6 lakh. What is the difference between these two? Yes, very good. 1,50,000. See now, this is 1,50,000. Then dividend and provision for tax to be added. So our NPBT, net profit before tax, will be 3,95,000. Good. Now how to calculate total tax paid during the year? Very easy. Tax paid during the year 80,000 minus dividend tax paid 15,000. So total cash outflow from operating activity is 65,000. Now it is assumed that decrease in the value of plant and machinery is due to depreciation of rupees 40,000 and 10% debentures will be charged on 2 lakh. See, you can give the notes, then it will be safer side. We have to give the working note always. How you will come to that point. Okay? And if you don't know how to make the plant and machinery account, I am going to fixed asset account. First of all, to balance by balance C. Okay, okay. Wait, I am going to show you how to make it. Look at the screen. To balance B by balance C. This is opening, this is closing. Here to bank purchase to SOPL, PNL we can write for profit. Here only these two things will come. Bank purchase, SOPL profit. And this side the reverse of it. Buy bank for sale, buy SOPL for loss, and by depreciation. This is the fixed asset account we have to make if any adjustment given in the question. Opening, closing, purchase, sales, profit, loss, and depreciation. So in this question, the amount given in this side, which will be treated as depreciation. Okay, any doubt you can ask.